Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday and it's the 17th of October. My name is Russell Shaw. I'm a senior market specialist at FXCM. My email address rshaw@fxcm.com. If you'd like to correspond, that is the email address to use. Kelly, somebody's going to give you a call today. I'm not sure if you spoke to anyone yesterday, but somebody will give you a call today. Just want to follow up on that email. I'm going to go ahead and just bring up the high risk investment warning. And I'm going to keep this on screen for a few moments. Good morning, Kim, Raj, and James. Pleasure to have you on the webinar as always. Thank you for everyone signing in this morning. Just bringing up the market commentaries disclaimer. And just finally, our references, market scope, and trading view. Just go straight through to view. And this is the data of the real rate. Actually started to creep up here, which is interesting. So we'll just put an arrow in here. So you can see it's starting to creep up here. So we're getting the green 5-day exponential moving average starting to pull away from that orange 10-day exponential moving average. So some pressure to the upside, and the RSI moving slightly up as well, staying above 50. I think we've got to be very careful with the real rate moving up. It tends to act against the risk market, and tends to support the greenback. So that's the start of today's hypothesis, so to speak. We had a terrific move on the Dow Jones yesterday. We'll take a look at that. Hey Howard, good morning to you. Welcome. Nice to have you on the webinar. All right, so let's just go ahead and bring up. Let's just bring up the US dollar. Remember, we're looking at the US dollar in terms of a higher real rate. Let's take a look at it in terms of this chart here. Now we had yesterday, it was quite foggy. Were we going to have a risk off? Were we going to have a risk on day? Turns out we had a terrific risk on day, and you can see that the dollar pulled down. It's gone into zone 2. That's our neutral area. But because the real yield is starting to creep up, you can see that the dollar is starting to move up as well. In other words, it may move back into zone 1. Let's just take a look at this on the hourly chart, see what support levels there are. All right, let's just clean this up. Okay, yesterday we said with regards to the dollar, keep an eye on the stochastic. If the stochastic stays sub 20, we're probably going to get that risk on day. That's what happened. We were looking at two scenarios. Either it was going to bounce off of a pivot, or it was going to break through the pivot. I'm sorry, it's just my system looks to be hanging. Give me a moment here just for it to come back. I'll give it another 10 seconds, otherwise we'll go through to trading view. We'll do the analysis. That's what I wanted. Okay, let's just bring this. Yeah. Okay, let's just bring in yesterday's pivots. Okay, so we said yesterday, if we maintain below the 20, which we did, we'll probably get the S1 level broken. That is what happened. It wasn't a terribly sharp sell-off in the greenback, but nevertheless, it was down. The situation's changed up today. Okay, the situation's changed up today. So let's just get the historical pivots out of there. Let's just go back to a cleaner chart. And now take a look what's happening with the US dollar here. It's what's sorry, my system embarrassingly is giving me all sorts of problems. Give me a moment here. All right, so on the screen, you've got the real rate. That real rate is moving up. And now what we're suggesting is that we take a look at the US dollar. And it seems to me that the US dollar looks to be moving up as well because of that real rate. And if we take a look at the dollar on the hourly chart, here you can see the EMA doing that bullish cross. The stochastic has already done the bullish cross, and now we're heading towards that upper quintile. Okay, we're heading towards it. If we hit that upper quintile and we hold, then there is a momentum behind the greenback. Well, if there's a momentum behind the greenback is generally regarded as a safe haven. It means we probably get some pressure on the risk side of the market, and we probably get pressure on the other majors. Okay, so the dollar here, quite instructive, but not in isolation. Not in isolation. It's following the real yield up. It's following the real yield up. And what we can do now is if the real yield's moving up and if the dollar is moving up, let's just take a look at the risk markets, see what's happening on the risk side of the markets. So the dollar pushing up. Let's take a look at DAX. Let's see what's happening on the DAX side of things. Okay. You can see that it looks as if the DAX is starting to show signs of negativity. What do I mean? The green exponential moving average starting to dip below the orange 10. So sorry, the green 5-hour exponential moving average starting to dip below the orange 10-hour exponential moving average. If it does cross and we get angle and separation to the downside, well, we've already got the Nasdaq that has crossed down, and then if it makes its way through to the lower quintile, then I'm afraid it looks as if we're moving towards that risk off sort of environment. So the idea here is that the real rate moving up is starting to have an influence on the markets. Okay, so let's just take a look at the daily chart. So we had a very good risk on day yesterday in the markets. You can see Nasdaq shooting right back into zone 1. I'm just concerned what happens with the real rate. If that real rate starts showing signs of moderation, fair enough, then the risk off, risk on dynamics probably shift. But right now, it looks like this heading upside, and that's going to put some pressure, one would think, on the risk side of the market, supporting again the greenback. Let's go through to the Dow Jones here. I want to show you something on the Dow Jones which I saw yesterday. So we just go through to the US 30. All right, I saw very strong movement in the Dow Jones yesterday, but again, we're right on that border of the zone 1 and zone 2. I fear that if that real yield carries on moving up, then we get a fallback into zone 2 on the Dow Jones. Because Dow Jones moved up so conclusively yesterday, it's an industrial index. Let's take a look at the DAX, which has similar characteristics, and see what happened on the DAX yesterday. So bring up German 30 CFD. All right, so you can see that the the DAX moved from zone 3 into zone 2, but again, it looks very tentative to me. It looks as if we might fall back into zone 3. Let's go down to the hourly chart and let's just see what's happening on the hourly chart with regards to the DAX. Okay, and what we need to keep an eye on here is, well, we do have a negative crossover in stochastic. We don't quite have that in the trend following indicators, which are the exponential moving averages. But if that exponential moving average does follow, if it does follow stochastic down and we start getting that angle and separation to the downside, okay, then we probably get a movement like this. That would make sense in that rising real yield environment. It would make sense in a rising dollar environment. There's another aspect. We're talking very much about yields here. There's another aspect we're going to consider, and of course, that's the geopolitics that are dominating currently. And I think that the geopolitics still making market participants very nervous. And if it's making market participants very nervous, well, nervousness is effectively uncertainty. Uncertainty is effectively risk. So if we're getting heightened uncertainty, well, then we're getting heightened risk. Then the safe havens come into focus. What are the safe havens? Well, the dollar. The next safe haven that we can take a look at is gold. Let's take a look and see what's happening on gold, which is actually showing some signs of resilience. Let's just bring up gold. Okay, now if you take a look at the daily chart, yeah, we've really had this huge spark up on Friday. So a lot of money seeking gold as a safe haven on Friday. It's now found its way, okay, into zone 1. We have got the RSI on the bullish side of 50. Let's go down to the hourly chart and see what's happening there. So if there is a fear that grows in the market, take a look. We have already got the stochastic that has crossed positively. If it makes its way through to the upper quintile, then there is probably an underlying momentum there. But we want to see the second trigger. We want to see the green 5-hour exponential moving average cross above the orange 10-hour exponential moving average and start developing what we call angle and separation to the upside. Okay, so again, it's all coming down to higher yields, and high yields effectively corresponding with a higher nervousness amongst market participants due to geopolitics that are still running through the market. Now, if the geopolitics are still running hot, the next instrument that we need to look at is oil. So let's just bring up oil. Take a look at US oil here. All right, and what we have here is, again, on Friday, a big movement into zone 1. This is interesting. if anything, oil is showing signs of neutralities on the 50. Okay, slight support in on the daily charts. If we go through to the hourly, what you can do is keep an eye on the stochastic, which has just crossed positively. Keep an eye on the S1, okay, on the S1 support level, and it looks as if we may get a bullish cross on the EMAs as well. So if we get a bullish cross on the EMAs and the S1 level holds, well, that's not going to be meaningful unless the stochastic makes its way through to the 80 area and holds. If it makes its way to the 80 area and holds, then there's that underlying momentum that's coming through as well. So keep an eye on the cross for gold. Again, I would expect if gold crosses to the upside, that would suggest nervousness. It would suggest a rotation of capital to safety. I think there would be pressure on the risk side of the market, the stock markets. So if there is pressure on the stock markets, the dollar benefiting because of high yields, gold benefiting because of the Mid-East conflict, oil benefiting because of the Mid-East conflicts. What's happening to, say, euro? Let's just take a euro as our last chart just to see what's happening with regards to the biggest major pairing out there. Okay, so just bringing up euro US dollar, and you can already see, okay, after the dollar sell-off yesterday, it does look as if the high yield starting to impact on euro US dollar. What do we see here? Well, trigger 1, trigger 2, and now given that trigger, if we get the stochastic falling through to 20 and holding, then I think there is a potential swing on here. And if there's a potential swing on here, I would say that is a result of a stronger dollar, and the stronger dollar a result of the higher yield. Okay, are there any questions around what we've discussed this morning? I just want to apologize for the slowness, the sluggishness of my laptop. Nevertheless, I think we've covered the potential dynamics that we're starting the day with. Are there any questions? Okay. What we'll do, thank you, Raj. I think what we'll do, let us wrap up at this point. Thank you very much for joining me this morning. I will do 2 webinars tomorrow because we'll do the crypto minute as well. Thanks very much, guys. Have a great day ahead.